Hola todos. So let's have a look. Using the information provided, identify and explain, so that's a couple of sentences per point, the principal audit risks. What's an audit risk? The risk that we might get an opinion wrong. The risk that they may have put something in that's wrong and we haven't noticed. So identify and explain the principal audit risks and any other matters to be considered when we're planning. Okay, 13 marks. I want to really come up with 13 things, I think, on this one. So, your client is a manufacturer of machinery, okay, you're currently planning the audit of the accounts, blah blah blah. All this, I'm sure you know, is to do with materiality. I won't mention materiality in this answer, but you will. Everything is material, but make sure you say, oh, this is 11.9% of revenue or whatever it might be. So anyway, we design, construct and install machinery for only five key customers. Payment is due in instalments, 50%, then 25%, and then 25% when it's installed, and it takes 6 months to build, basically, and the word is construct. So, what is the risk that something might be wrong, that they may have done something wrong? I hope you're shouting at the screen or saying in your head, I think it might be revenue recognition. Okay, revenue recognition. Now, revenue recognition, when you see the word construct, what you're looking for then is basically more than a day, and this time it takes 6 months. If you see something that's been constructed over 6 months, then the revenue should be spread over the 6 months. Because take this to its logical extreme. If you think that something was created or constructed over 3 years, would it be right not to show the revenue in year 1 and year 2 and show it all in year 3? Obviously not. It'd be best to spread it according to how much you've done. So we would spread it over the 6 months. Now, what we would be worried about is that, look, as soon as the order is confirmed, 50% is going in. So we hope no immediate revenue recognition, because if so, then they will have overstated revenue. Something along those lines, 2 lines per point minimum. We've come up quite a lot there, so we might get more marks for that. At the 30th of November, there's an amount outstanding of 2.85 million, which is definitely, it's a big figure, isn't it? It's 2.85 out of 5.6 profits. The amount is a disputed payment. Jack's Mine is refusing to pay until the machinery is 100% efficiency. So we've got a potential refund here. So potential refund means a provision. We hope it's been put in, because if the provision hasn't been put in, then we'll be understating liabilities, and obviously you would mention the materiality of it, and it really is quite a big figure. One customer, Sawyer, communicated via its lawyers that they're claiming damages for injuries suffered by a drilling machine operator whose arm was severely injured when a machine malfunctioned. Kate Shannon, the chief executive of our company, has told you that the claim is being ignored. Well, stop there. Ignoring a claim, then I'd have to worry. This is like one other matter in planning. I'm now worried about the integrity of the client. Ignoring things like this, so that will increase the inherent risk of the client. Yeah, more than that though. What else have we got? It's being ignored. It's generally known that the customer has a poor health and safety record, thus the accident was their fault, was it? 2 orders which were placed in October have been cancelled. So we have, first of all, this potential provision again. Okay, so again, the understating of liabilities. And there's only 5 customers, and we have problems with 2 already that we know about. Therefore, going concern issue. We also have, you could say, would there be any further provisions needed? Anything else that's been ignored? Okay, and the cancelling of the orders, as we said, going concern issue. Work in progress is valued at 8.5 million. Stop there. There's an audit risk involved there in our planning. We'd want to go and have a look at the work in progress. Why is it an audit risk? It may need an expert valuation Why may it need an expert valuation? Because it will probably involve judgment as to what the stage of completion, its value. Try and get these depth to the answers. A physical inventory count was on the 17th of November. Our year end is the 30th of November. So again, an audit risk there on the stock count. Held 2 weeks before the year end. So we've now got to make sure that we see the movements in the 2 weeks. Anything significant. So more cut-off work needed. The chief engineer estimated the stage of completion of each machine at that date. The chief engineer doing it, so the chief engineer, is he qualified to be valuing the stock? One of the major components in the coal extracting machinery is now being sourced from overseas. The new supplier is located in Spain and invoices in euros, and we have a trade payable. So hopefully you're telling me that we have foreign exchange risk, and what we should do with foreign exchange is that any foreign monetary balances should be retranslated at the year end and difference to income statement. So this would apply to the payable but not the stock, because the stock's not a monetary amount. Super. All machines are supplied with a 1-year warranty. Stop there. We want to have a look at the warranty provision then. We want to look at the assumptions behind it. We want to have a look at its consistency to previous years. What does it tell me about it? A warranty provision is recognised at 2.5 million. It was 2.4 million last year, so just a 100,000 increase. Presumably, the more we sell, the more provision we've got. To have a look at the revenue. Revenue was 103, is now 125. So the revenue's gone up by what? 20%, 25%, and yet the provision has only gone up by 0.1 million. What has happened? So particularly here, the revenue increased by 25%, but not matched. And we want to work out why. It might be just because it's better quality, but probably not, because we've already had that issue with the injury, haven't we? Kate Shannon estimates the cost of repairing defective machinery by the customers, and this estimates the form. So why is she estimating the cost of defective machinery? Again, so Kate Shannon, she is estimating the cost of defective machinery. Again, is she qualified to do so? What assumptions, etc., is she using? Cool. Kate Shannon owns 60% of the shares in Ireland. So why is that an audit risk that your CEO owns 60%? Hopefully you'll realise there's a self-interest risk, therefore a higher risk of manipulation. Super. She also owns 55% of Pacific, which leases a head office to us. So related party transactions. We need to make sure that they are disclosed properly. And that includes transactions, balances, nature of them. Keep going. And Kate is considering selling some of her shares. So definitely then. Risk of manipulation, particularly as considering selling. And then when you look at it all, it's all going one way, isn't it? So, point number 14, all risks seem to be the overstating of assets and income and the understating of liabilities and expenses. So that would make us worry more about Kate Shannon's involvement. And then finally, she would like the audit to be finished by that time. Okay, so there's a bit of an intimidation threat in terms of the timing of the audit. Okay, particularly as it's a new audit for us, so therefore what we'll need to do will take more time. Okay, they're the sorts of things that you would be mentioning. Obviously I've done it quickly, but 2 lines per point, and you should be able to get the 13 points there. And we also got 2 professional marks as well, so you should, if you just allow yourself to follow the scenario. You do need to go check the classroom to make sure you're up to date on all the financial reporting stuff. I have put it all in there, but yeah, not too tricky, I don't think.